This is the Coso Capital Podcast. We're talking about U.S. consumer sentiment. It plummeted to a second lowest level on record going back to 1952. It went down 11% to a preliminary reading of 15.8. It's the second lowest reading on record going back to 1952. It says President Trump's volatile trade war, which threatens higher inflation, has significantly weighed on Americans' moods these past few months. So we're going to talk about that, talk a little bit about interest rates, and then what happened last week, and then share something fun. I got a little book called 4,000 Weeks, share some notes about that. And then we just had the Kentucky Derby. How about that? So, all right. So this is talking about consumer sentiment. It's talking about the sweeping tariffs. There's it says this decline was like last month's, pervasive and unanimous across age, income, education, geographic region, and political affiliation. So a lot of groups are not feeling good about the economy, which is not good because our economy is focused on purchasing, the consumers purchasing stuff, right? So if consumers are not happy, are concerned, then they're not purchasing, then we're in trouble, right? Because it's going to affect businesses. It's kind of like a domino effect, right? Then I have to check if the audio is working. It looks like it is. Now, sentiment has now lost more than 30% since December 2024. This is, we're talking about consumer sentiment amid growing worries about the trade war developments. And this is an article from the CNN.com. All right. And then we have Trump on Wednesday paused his massive tariff hike on dozens of countries, thank goodness, for 90 days, but he kept it in place, a 10% baseline duty for all imports into the United States and separate tariffs. So if you don't know what's going on, there's tariffs, they're being placed on different countries. There's a baseline tariff of 10%, but then there's also tariffs based on the amount of trade that's going on between the countries. And if we're if the countries are exporting items to us, we're importing them, then more tariffs were placed to try to balance the good. They're trying to balance the goods that are coming into the country. It may or may not work. That's what they're talking about, but that's what they're trying to implement. That's what the president's strategy is. The so-called reciprocal tariffs, albeit short-lived, were the sharpest increase in U.S. duties ever on data going back 200 years. This is the highest, the fastest time the tariffs have gone up, and it's kind of like the highest. So think about before the income tax. Was doing some research on this. There was something called the Smoot-Hawley Tariff Act. So we the United States, we weren't free traders. We weren't trading around the world. We kind of weren't letting countries come into our markets. But what we did is we used to make our money through tariffs as a country. But then we actually implemented the income tax. And then actually the United States has gotten wealthier and wealthier because of the lack of tariffs. So let's see how this works out. But this is another highlight from here. It says the share of consumers expected unemployment to rise in the year ahead increased for the fifth consecutive month. So consumers are expecting the unemployment is going to rise. Unemployment rises. Of course, it's a tough time for people, but it's a tough time for businesses. It's a tough time for the economy. It's a tough time for the stock market and for all these investments. Sometimes the surveys are very negative, but they keep spending. So the Fed says sometimes people feel bad about the economy, but they still buy stuff. Very, very possible. What's up? How you doing, Josh? Josiah Niles, how's it going? Thanks for being here. All right, so so it's talking about Jerome Powell said last week at an event near Washington, D.C., people spent right through the pandemic and they spent right through this time of higher inflation. So even though inflation was high, everything that was going on, people kept spending money, right? So not necessarily anything that's terrible that may affect spending. Sometimes bad things happen. People still have to make purchases. They still want to go to the movies. They still have to buy food. They still need to do all the spending they need to do. All right. So now expect real GDP growth will slow considerably from last year's pace, likely to somewhat below 1%. So GDP, how fast the economy grows, gross domestic product, it's like nerdy, conversation. This is how the economy is doing, right? How much money they're making, how well it's doing. And they're expecting it to slow. A healthy economy here in the United States, they want it around 2 to 3%. That's where it should be growing. That's how it had been growing post-COVID. But now they're expecting it to go down 1% to 1% growth, which is not good. That's actually kind of look at it like a 50% deduction in your growth rate, right? So if you're doing well, imagine they were to cut how well you're doing by 50%. So that means next year you're not going to be doing as well as you've done every year. You kept getting better and better. Wealthy consumers, stock market gains kept the economy growing in 2024, but the wealthy won't feel confident enough to keep spending if they keep this up. I mean, I think that's, I don't know why they mention that, because that doesn't really that much matter, because the wealthy are not the ones running through the economy. The biggest spenders in the economy, of course, are the middle class and possibly the low middle class. Larry Fink, Chief Executive Officer of BlackRock, the world's largest asset manager, this one's a big deal. He said that today's dense fog of uncertainty triggered by Trump's tariff is reminiscent of the 2008 global financial crisis. So a lot of people are talking about that. But he said, this is what I like, opportunity. We've seen periods like this before when there were large structural shifts in policy and markets, like the financial crisis, COVID-19, surging inflation in 2022. We always stayed connected with clients, and some of BlackRock's biggest leaps in growth followed. All right, so here, guys, he's selling his business to people to say, invest with us, right? That's what he's doing there. But in times of turmoil, in times of challenge, there may be opportunities. So if that's something that maybe keep an eye out there. All right, the economy is facing considerable turbulence. This is from JP Morgan Chase CEO Jamie Dimon, including geopolitics. I actually think this is an area where the president's actually winning. If he keeps China without, we don't want to get into a big war with China. So as long as we don't get there, it looks like the strategy for the Ukraine-Russia war, it may end, right? We'll see how that works out. He's trying to push them into peace there. With the potential positives of tax reform and deregulation and the potential negatives of tariffs and trade wars. So that's one of the biggest risks. A growing worry for the Fed. There's one survey measure that matters a whole lot to the Fed, and this is it's Americans' perception of prices. All right, so think about that. People are not, it's not about prices themselves, but how people feel about price, or do they feel that they're going to stay the same? And if you think that prices are going to go up, we're talking about the general public, then that is not good, because that means that people are going to say, oh, you know what, inflation is going to go up. I need to buy more things now. That means inflation goes up even faster, and it just kind of is, again, a domino effect. So that's not good. Expectations for inflation rates in the year ahead surged to 6.7% this month from 5% in March. So people think inflation is going to go up even higher. All right. Now, that was not good news, right? But let's talk about that was bad news. Let's talk about some good news. Employers added 177,000 jobs in April despite tariff uncertainty. This one's from the Wall Street Journal here. And it says hiring slowed slightly from March's pace while the unemployment rate held at 4.2%. However, the Labor Department reported Friday that the U.S. added 177,000 jobs above the gain of 133,000 that they were expecting. So the economists, Wall Street, they had an expectation. We blew through that expectation. The unemployment rate, which is based on a separate survey from the jobs figure, held steady at 4.2%. The report revealed solid data that no one wants to trust. That is because the figures likely reflected staffing decisions made in February and March. And then this is talking about all the layoffs that have been going on in the economy, all the people that have been laid off, all the government, the Doge system. So the higher job number may not be correct because there were tons of layoffs that people are still earning income in severance packages. So they're not off the government's books. So this may be significantly higher. He implied later in the month that he would fire the Federal Reserve Chair. Then he said he had no intention of doing so. This was Trump. He said this because he wants the Federal Reserve Chair to lower interest rates. The Federal Reserve Chair says, I can't lower interest rates. We're watching the market and seeing how the market does. And if inflation stabilizes, then we can lower interest rates. This is what's happening. But the president is trying to push him to lower interest rates. So what's going to happen? Well, he threatened to fire him. Technically, he could just wait until May of next year, where his term expires, but he wants to fire him now so he can get him, he can put somebody there as the Fed chair to push for lower interest rates. But this is the thing, the Federal Reserve chair sets the agenda, but it's not only him making the decision on interest rates. There is a panel of people, a group of, they're called Fed governors. They all vote, and the decision is based on the majority of those Fed governors. So some of them are voting, some of them are non-voting, but just changing the Federal Reserve chair may not solve the problem. And just pushing him, thinking that you're going to lower interest rates may not solve the problem either, because if the market sees that that is a bad decision, it could even push interest rates up higher, right? Because the 10-year will go up higher. I know I'm nerding out, but stay with me. Employment is strong, which is much more good news. This is what the president said. But James Knightley, an economist at ING Financial Markets, said the longer that this uncertainty lasts, the more cautious businesses become about hiring and investment, right? So that's part of the whole GDP thing. GDP going down, less investments, less business investments, less hiring. In earnings calls over the past few weeks, companies have complained of the high degree of instability created by tariffs. Many companies, including General Motors and JetBlue Airways, withdrew their earnings guidance for the year. I don't know if you know what earnings guidance is, but earnings in the public markets, the stock market, companies provide guidance on how they're going to do in the next quarter, in the next year. And they say, hey, we're probably going to be doing, we did so much revenue this quarter, we're probably going to be doing the same or a little bit more next quarter. And it kind of just helps investors and analysts, hedge fund managers, institutions to have an idea of where the stock is going, so then they can make bets and investments on it. Now, they said they withdrew their guidance. They're not giving any guidance. They don't know exactly how things are going to turn out, and they don't want to be stuck on guidance, because what happens is if they set guidance and then they don't meet it, the company looks bad and the stock goes down. Many appear to be taking a wait-and-see approach when it comes to cutting workers, so they're not firing people, which is good. For some, the reluctance stems from having worked so hard to staff up during and right after the COVID pandemic. So companies are keeping employees because it was hard to find good people during COVID and after COVID. Still nervous companies could choose to simply put hiring on hold, which, I mean, that makes sense. Consumer sentiment in April hit one of its lowest levels on record. I kind of already talked about that in the last article. And sometimes they're saying that even the April's jobs gains may be false, because it says they may have been driven by the burst in activity that occurred as companies worked to get in front of tariffs. So that they did a lot of hiring of workers that worked in transportation and warehousing, getting goods in, so that way they didn't have to pay the tariffs, because if they knew the tariffs were coming, they ordered the goods came in, they hired all these workers. But now it was just kind of like I don't know, like a little stimulus for that short amount of time, because companies were hiring more. That's what they said. It says job openings for loading and stocking workers earlier in the year reverts itself by April. So by April, they hired a whole bunch of people in that area, stocking, warehouse, but then it reversed. It went back to normal. Federal government employment declined by 9,000 jobs, the third month of job losses there. Right, so that's, again, 177,000 jobs. It may not be correct. We'll see how it turns out. However, those losses don't reflect the magnitude of the job cuts from the Trump administration. We'll leave it there. Interesting article with a little bit positive news, but we need more data to verify how that's coming along. All right, so where are interest rates today? As you know, I'm a licensed mortgage professional, and we do lending throughout the United States for investors, and in the state of Florida for homeowners, and in the state of Virginia. NMLS 388985. If you're looking to buy a home, you're looking to refinance, you're looking to buy investment property, we'd love to help you. We'd love to work with you and get you the financing you need. Coso Capital can get you the financing you need to buy a home, buy investment property, or buy commercial property business. So with that, now I'm gonna go over, there's a book I read, man, this was a powerful book. I really liked it. And it's called 4,000 Weeks by Oliver Berkman. And I mean, I had tons of notes. I mean, I'm gonna share a few with you today in respect to Oliver, but I highly recommend you read the book. It's one of those books you're like, man, you really should read it. And here we go. So He shared so many things. One of the first things he says, we're not talking about a time hack or a better to-do list. Okay, with this book, it's actually you have 4,000 weeks to live, right? That's why he named it 4,000 weeks, and that's it. Now, this book again is by Oliver Berkman. It isn't about how to manage time; it's about how to stop letting time manage you, right? Who has a problem with time management? How about that? So, section one. So you'll never catch up with time, right? It's a big myth that you'll eventually get ahead. So that if you master your schedule, optimize your habits, and finally get productive enough, peace will come. But according to 4,000 Weeks by Oliver Berkman, that chase never ends. Berkman reminds us that trying to dominate the time only causes more anxiety. You can't dominate time, it doesn't exist. Instead, accept the overwhelm. Not everything will get done, and that's okay. The key is to choose what matters and to let the rest burn. I love it. All right, do less, matter more. It's not just about big rocks first, it's that we're juggling too many rocks. So if you've read the book by Stephen Covey, The 7 Habits of Highly Effective People, very famous book, he talks about having rocks and having small rocks and having big rocks, and then first handle the big ones and then put the small ones into the jar after the big ones, and then everything will fit in the jar, right? Because if you put the small ones first and then the big ones, it won't work. Okay, that's what procrastinate on purpose. Here are the things you never get to, and that's fine. Decide what you're willing to bomb on. Save your limited energy for the projects and people that truly enlarge your life. Even Warren Buffett uses this. Focus on the top 5 goals and say no to everything else, even the good ideas. Even the good ideas. Section 4, he talks about presence and planning. Berkman says planning is just the present tense of your intentions. The future doesn't owe you anything. What matters is not controlling the future, but being present now. This includes embarrassing hobbies you enjoy just for their own sake. So even if there's something that's embarrassing, it's a hobby you wanted to do, just do it because you want to do it. It doesn't matter if you can't brag about it, but this is something you really wanted to do. Live slowly, doing things that aren't productive but make you feel alive. I love it. You don't need your life's work to be recognized. You just do the work anyway. I mean, how about that? How about if we do something just for the work and not to be recognized for it? I know we're in the era of social media and getting recognition, but what if it's just for fun? 5 killer questions to ask yourself. He leaves us with at the end that punch your ego in the face. Where are you chasing comfort when a little discomfort would help you grow? What are you waiting to start because you don't feel ready? What standards are you holding yourself to that no one could meet? Are you living for results or are you living to experience? Ooh, I like those. These questions are for the brave, for those ready to stop living on autopilot. Section 6, he talks about 10 tools that actually help. I'm not going to share all of them, but here's a few. He closes with some tools, not hacks, but mind shifts. Keep a done list instead of obsessing over your to-do. Have one work project and one personal project only. Embrace boring technology. Make your phones less fun, right? Because we're addicted to our phones. They're too much fun, but what if we disconnect from them, right? So we can kind of get more into the nature and not distractions and not the social media, not the email. Find novelty in the ordinary. Go on an unplanned walk or take a different route. Practice spontaneous generosity, right? So when you feel like giving somebody $1 or $5 or writing a note, a thank you note, do it and see how that makes you feel. Set a timer and literally do nothing. So not because they make you productive, but because they make you human. So he talked about in the book, there's a story about a professor, I think it was at Harvard or New York University, and she told her students, I believe they were studying art, and she said, go to a museum and pick a painting and stare at that painting for 3 hours. And notice what the difference, how is that going to affect you? Don't do anything else other than stare at this painting and maybe go use the bathroom. And what some students would share is that you wouldn't notice it in the initial few minutes when you're looking at a painting. But after you're looking at it for a while, there was one painting with a child, and then there was a man, and there was some other type of animal in the painting. But they noticed later that the painting showed the animal and the boy, that they had the same shape and the same size, and they reflected a lot of different things together of themselves. And there was a big intention behind the painting. And we don't notice a lot of these little things because we have so many distractions going on. So let's focus for a little longer and let's enjoy these paintings and look at a painting like our lives and see that we can enjoy that a little bit more than we're enjoying it now. The final thoughts, you get one life, you get 4,000 weeks on average, and no, you probably won't be remembered like Einstein, but that's the wrong metric. Instead, aim to live meaningfully, not efficiently. Be here now. Feel time. Choose discomfort when it's worth it. And love the life you're actually in, not the one you're optimizing toward. Thanks for listening. And if this resonated, go check out 4,000 Weeks by Oliver Burkeman. And hey, don't forget to hit the subscribe button and share this with someone who's drowning in busyness and needs a lifeline. So I hope you enjoyed that episode, guys. We'll get more episodes done over the next few weeks. And in fact, the last thing I'll share is what we've been up to. We're about 21 minutes in. I shared it. I was trying to do this last week, this live, and we're working on a few things. We're working on a development, and this last week, an exciting time where we finally got approval from the city, verbal and written. We got a written approval that it's a staff approval that now we can go to what's called the planning and zoning meeting. And this is how development works when you're doing a big project. Which our project is pretty large. It's about 35 acres, 40 acres with an existing parcel that's on there. And we have to get certain approvals, and we're doing a planned development. It's also called a PUD. This is nerd developer talk, but it's something that allows us to have flexibility in lot sizes so we can make smaller homes and actually make them more affordable. And we've been going back and forth with the city for about a year and a half, more or less, maybe even 2 years. We had some designs, we sent them in, they sent them back. Then we went ahead and had other designs, we sent them in, they sent them back. And finally, we came to something that was a good fit. And we did something called a neighborhood meeting. So this is when we let all the neighbors know what we're planning to build. They come, we have the design there, and they can come and give a comment. Now, our neighbors are not very active. They're very quiet because it's a lot of empty land and there's a cemetery. So nobody around us really cares what we build right now where we're at. We're in a great location, but it's still developing. And so we got this approval from the neighborhood meeting. Everything looked good, but the city was actually trying to possibly have us do a second neighborhood meeting. They're trying to say that people that have had a neighborhood meeting about 18 months before or longer, they should have another one because people are not getting, the proper due process to complain at the meeting or to state their observations about the sites, etc., like neighbors. And we really weren't under there. We were about 15 months, and the reason we were there is because we've been going back and forth with them. We haven't put this project on hold and come back to it years later and had an old neighborhood meeting. So now we got the neighborhood meeting. They said we don't have to do one. Amen. We already did one. We don't have to do a second neighborhood meeting. So now we're going to go to the Planning and Zoning Commission, where we sit down, and these are people that are appointed in these positions. It's typically not staff or anything like that. It's people that are appointed, but they're the other developers, or it could be people that are other planners or other people appointed maybe by the mayor or the city council. And they review our project, they review, and they make a recommendation to city council. And what we're looking to do is to have a recommendation from them for approval for our site. And if we need to make any adjustments, we will. Hopefully we don't have to make any, because adjustments cost quite a bit of money to even make. But I'm just glad to be moving forward. I'm glad for progress. And one of the quotes that I've been kind of on these last few weeks is progress over perfection, right? So sometimes I fall into that perfectionist category, and then I just need to know, hey, look, progress over perfection. Don't worry about it. Just focus on getting better. Just focus on learning, improving, and putting things out there, and then you keep improving on it from there. So excited to share there. I'm not going to make this longer than it needs to be, but that's one thing on the development side that we're moving on. Another thing too, that's an exciting thing to share. We actually set up our first short-term, medium-term rental. So it's a furnished apartment, and it's a 2-bedroom, 2.5-bath townhome that we have up here in Ocala, Florida. So if you're looking to visit Ocala, check out Hometown Haven. And it took a while to get it set up. We had to turn the unit, so we renovated the unit. And then after we renovated the unit, I was able to get discounted furniture from a friend that they were selling their property, and there was a short-term rental in the past. So I got some things there, and then I ended up spending quite a bit of money getting quality beds. Spent about $3,200 on beds. That's for a queen bed, 2 twin XL beds, ended up buying furnishings, more additional furnishing, buying the TVs, spent about $1,000 on that. So on the unit, somewhere between around $9,000 more or less. But we've already gotten about 4 or 5 bookings out of it. We're still not at break even what we would have earned on a long-term rental yet. This is going to be the first full month where we're renting, but this month we already have 10 nights booked. So I think we need about maybe 3 or 4 more nights to be at break even. So I'm excited about that's working out and being successful. I've been wanting to do a short-term rental. I hadn't done that. I've always done long-term unfurnished rentals, but wanted to see if how that works out. And I've heard a lot about the revenue is significantly higher than doing the long-term rentals. And it actually is. I mean, imagine you're on a long-term rental, you rent the property for $1,400 a month, where on a short-term rental, you got to add utilities, which is about electric is about 200, cable is about another $60, water another $40, $50, so about $300 a month in utilities. But then you can possibly earn $3,000-$4,000 a month, maybe even. And even on the low side, even if you're making $2,000 or $2,500, that's an extra $300-$500 a month that you're getting an extra income. So a lot of opportunity there. Trying some new things here with what we're with our investing. We're still about a year away from our development, so I wanted to see this apartment complex. Wanted to try that out, and if it works out well, we're gonna try it for like 6 months to a year, and then maybe we'll set up another short-term rental as long as the numbers support it, and we're able to make back the money that we invested on furnishing it, which is about the $9,000. So think about that. If we can get that back within a year, I mean, that's fantastic return. I mean, imagine you put out money that you invest, and within 12 months you get your money back and the rest is profit. I mean, that is fantastic, right? So I think we want to definitely watch that and see how it goes, and not going to jump the gun on that, but definitely want to try it out. If you haven't, please subscribe. Please give us a like. Subscribing helps people find the show. Liking, it really, it's easy. Just press the button. Comment on the show. If you comment, the algorithm really, really likes that. And then, of course, share the show with other people. This is what we're looking to do. Share our investing and wealth building. Share about home ownership. Share on market information. What's happening in the market here, particularly here in the United States, and really trying to break it down. You see, I'm not an economist, but I'm a nerd. I like to read a lot, and I've studied real estate and investing in business, and so I try to break those down for myself, and I get to share it with you. So it helps me to internalize all that information, and finally, definitely share what we're doing to inspire other people so they can take action and know that they can do this and invest. Because I'm not a genius. It's just do some work, and I put in some time and effort, and then the results kind of show up based on that time and effort. And then lastly, the last topic that I really want to cover in the show is really books. I'm a big reader of books from a variety of subjects, and I think a lot of that is appropriate for a lot of people. There's useful information, so I think you can benefit from it, and we can kind of helps me internalize all the material as well. So we'll leave it there. 30 minutes in, that's what I wanted to get to. See you on the next one. Take care.